Dear students, today we will continue with the demo of some other vouchers, that is optional vouchers, reverse journal, post-dated vouchers. Okay, I'll show the demo first and then we will continue with the next concept. In the accounting voucher, there is a button reverse journal. As I said in the last class, in the features, if you enable use reversing journals and optional vouchers to yes, then it will show the optional voucher and reverse journal. Now we will activate reverse journal. When you activate reverse journal, it will show the option applicable up to. That means when we are entering reverse journal transaction, up to which date it must be active, that we can specify by using this applicable up to. As I said, reverse journals are for some specific date, and that specific date we can enter by using this applicable up to. Just we will see one example. Debit to salary account, we will take 5,000 rupees. Credit to provisions, 5,000 rupees. Okay, just for the adjustment. Maybe I want to take the salary in the May month on 5th date. Okay, just for the transaction purpose. For that purpose, we can take reverse journal. Then applicable up to 5th May. Okay, then enter. Now in the display, select exception reports and then reverse journals, and it will show the reverse journal. Okay, that is reverse journal of 5th May applicable up to. Commonly, the people will take the reverse journal for the month end, maybe for the quarterly, year end, or maybe half yearly end, or at the year end. Just for the balance sheet purpose, we can enter the reverse journal. Okay, this is one thing. Second one is optional voucher. It is same as memo voucher. And in accounting voucher, memo voucher is available as an optional voucher. Optional is not available in the accounting voucher, but when you move to inventory vouchers, you can see the optional voucher. That means in the accounting voucher side, there is one optional type of voucher, that is memo, and in the inventory voucher side, there is an optional voucher, that is optional. If you click on optional, it will allow you to enter the optional voucher. Next is post-dated vouchers. How we can enter the post-dated vouchers? Here you can see there is Control T, post-dated, and when you click on post-dated, it shows the post-dated button here. The meaning is the current voucher is changed as post-dated. Now I will take the transactions for 15th May. One transaction, maybe debit to refreshments, or I'll take salary account, maybe 10,000 rupees, and credit to cash 10,000 as a post-dated for the 15th May. Enter. Now, if you see the profit and loss account, now we are in 5th May now. If you see the profit and loss account, it will not show that expense since we are in 5th May now. But you can see that post-dated voucher by using display, exception reports, then post-dated vouchers. Okay, this is how we can enter optional vouchers and post-dated vouchers and the reverse journal. Now we will see one case study example. Since for the case study whatever things are needed that we have completed, so I will take case study now only. So case study question may be for 15 marks. Maybe the question may be Mr. Arun commenced the business on 1st of April 2018 in Bharat Enterprises Private Limited. Journalize the below transactions in the following format. Format is date, ledger, group, voucher, debit, credit. Okay, and the entries are given. Okay, now we will see the transaction. 1/4/2018, Mr. Arun started business with cash rupees 3 lakh. How we can take that one? Date, ledger, group, voucher, debit, credit. So 1/4/2018 is the date, correct? And cash and Mr. Arun's capital account. Cash comes under the group cash in hand. Main group is current asset, but the subgroup of cash is cash in hand. Mr. Arun's capital account under group capital account, and the voucher is receipt. Even you can mention shortcut key F6. Debit 3 lakh, credit 3 lakh. 4/4/2018 machinery account, that is he purchased machinery for rupees 80,000. Then machinery account and cash account. Machinery account fixed asset, cash in hand, and the voucher is payment, that is F5. 80,000 debit, 80,000 credit. 10/4 deposited into bank rupees 1 lakh. Then 10/4 bank account cash. Bank account under bank account, cash in hand, voucher is contra F4. So debit 1 lakh, credit 1 lakh. 15/4 loan given to Mr. Amit rupees 25,000. Amit's loan account, cash account. Amit's loan account. Okay, even you can take loan paid to Amit. That will be better. Loan paid to Amit. By that we will understand it is loan paid. Loan paid to Amit account, loans and advance. When we are giving loan to others, you have to take it as loans and advance. Then cash in hand. Voucher is payment, debit 25,000, credit 25,000. 17/4 paid factory rent rupees 2,000. Rent paid account cash. Rent paid account indirect expense, cash in hand. Payment F5 2,000 rupees debit, 2,000 rupees credit. 21/4 purchased goods for rupees 19,000 from Mr. Mahesh. Then 21/4 goods purchase account, Mr. Mahesh account. Since the name is given and it's not mentioned on cash or on check, so we can consider it as a credit purchase. So goods purchase account, Mr. Mahesh account. Goods purchase account under purchase account, Mr. Mahesh account sundry creditors, and voucher is purchase F9, debit 19,000, credit 19,000. 23/4 depreciation of machinery at 1,000, and amount is given, fixed amount. So depreciation on machinery and machinery account, it is indirect expense, machinery fixed asset, voucher is journal as it is a adjustment. 1,000 rupees debit, 1,000 rupees credit. 26/4 sold goods for rupees 35,000 and received check. So then it is one type of cash sales. So bank account and goods sales account. Bank account under bank account, goods sales account under sales account. Voucher is sales. And shortcut key is F8. debit 35,000, credit 35,000. 28th, purchase return to Mr. Mahesh 1,500. Purchase return account Mr. Mahesh account. Purchase return account under purchase account. Mr. Mahesh account sundry creditor. And then voucher is, even you can take journal or debit note. That is same as journal. Debit note is for purchase return. Control plus F9 is shortcut key. 1,500 rupees debit, 1,500 rupees credit. 29.4. Received commission of rupees 6,500. So cash account, commission, received account, cash, under cash in hand, and commission received, indirect income. So voucher is receipt. 6,500 debit, 6,500 credit. So in this way you have to solve the case study problem. It is of 15 marks. Thank you, students. In the next class I will show how to create the problems using VAT system. So how we can create the VAT, that is VAT taxation, and how we can solve the problems using VAT. That problems we will see in Tally. Okay. Thank you. God bless you.